Welcome to another episode of Divorce After 50, Navigating the Silver Split. In this episode 4, Divorce and Insurance, we're diving into a topic that affects many in this demographic of divorce. So specifically, how divorce after 50 impacts your insurance needs and what considerations you should keep in mind. Joining us today is Stacy Starkey, an experienced insurance agent who has helped numerous clients navigating this challenging transition. Welcome, Stacy Starkey. Before we begin, we are not attorneys, financial planners, or tax advisors. Any questions or advice you may have should be directed to a professional.
Thanks, Shari, for having me today.
Hey, Stacy. Let's start with the basics. How does divorce later in life differ from divorce at a younger age, especially in terms of insurance implications?
Well, divorce after 50, often referred to as gray divorce, brings unique challenges, especially concerning health insurance and retirement planning. For instance, you'll want to do a comprehensive review of what your current health rates are and coverages are to get a comparison on what the new rates should be and if they're going to change. Remember, if you're employed, not employed, or retired, this can be a completely different scenario for each person.
Yeah, and in my case, I know I had to find private insurance, and with all the different carriers and coverage, it was so confusing. I didn't know what the right coverage was, and the cost is almost as much as a mortgage payment.
It is. It can even be some people, their biggest expense is their auto. Sometimes it's their mortgage. So just remember that you should be budgeting for those things and considering them when you're talking through asset splits and things like that that you're not sure of.
Is there any way that someone could contact you to get a quote to find out what they could expect?
Yes. So we can walk through. If you work with a current financial advisor, we can work with your financial advisor too to get quotes and figure out what's the best way. Some ladies and gentlemen in that era are going to be facing that they're already retired, so they're not needing insurance. They're more looking at what is Medicaid going to be looking like for the future. There's individual plans, and then there's also doing comparatives from if you were a spouse on a plan to now you're on your own plan, what's the difference in those rates are. So there's so many different levels of what health insurance can do for your finances or what you're going to spend more in your finances that we don't think of when we're going through the actual divorce.
Yeah, and that's what, like I said, I just really didn't know what was available because I never had to do it in years and years that I've always been on the family plan. And it can get quite overwhelming. Health insurance can be a significant concern post-divorce, and what should listeners know about navigating this transition?
It's really crucial to understand options like COBRA, Medicare eligibility, or individual health plans. Each option has pros and cons. It's really depending on if you're employed and you can enjoy your current employer plan, or if the divorcee needs an individual plan. Rates on an individual plan can vary extremely. They consider current income and health needs, and sometimes people don't know what their current income is going to be until after the divorce. So it's really working with a financial planner to know what am I looking for as income. Traditionally, these types of plans, if you're on an individual plan, are going to be extremely more expensive than any other plans that you can be on.
What would happen if the spouse was uninsurable because of existing health issues?
So at that point, you'd have to look at different state options there are out there. You also could look at if they're currently on disability or have been disabled and would apply for a Medicaid versus a Medicare option. And then it also depends on age. But if there's no insurance, then majority of people are going to be going out of pocket for their health expenses.
Yeah, that is a concern because you can't anticipate what those are going to be.
Right.
And being older, that's when you are developing health issues, and it would be really difficult for somebody to be able to come up with that money out of pocket for sure.
Yeah, that's right.
So many couples have joint life insurance policies and retirement accounts. How does divorce affect these?
Well, divorce affects all of those, actually. There's different things to look at. You can look at dependents. Who are you actually your beneficiaries and dependents on that policy? If it's a joint policy, is it better to keep that policy in place because it was put in place very early on? There are many reasons why people do, after divorce, keep their ex-spouse as a beneficiary, like dependent children, and it even can be dependent adult children. It also can be that there's a bunch of assets that haven't been divided yet. The divorce is final, but the assets haven't been divided yet. So there is a common need for income if the other person was not involved in the picture any longer.
Like you discussed, there are times when it would be appropriate to leave an ex-spouse on the life insurance as a beneficiary, and that can be part of the divorce settlement.
Yes, and you can set up a trust too. So if it's a portion of the life insurance that needs to go to the ex-spouse due to an asset, you can have the trust set up. The certain percentage goes to other beneficiaries to take care of their future needs, and then you can have it on the opposite side. You also want to look at your current life policies to make sure that there's not any additional endorsements on there, because there can be some long-term care. There can be some disability endorsements that are on there. There can be some child-dependent insurance that's actually added on, tacked on until that child's 26 years old.
Yeah.
So there are different things to look at in each life policy and to review. Those are things that me and my team do all the time.
Yeah, definitely. There's a lot. Can everyone qualify for life insurance?
No, they can't, unfortunately. There are certain health things that keep people out, disabilities that will keep people out, certain surgeries. And then there's other types of insurances that you would think that if I have a certain diagnosis, I can't get insurance, and you still can get it. So it really is on each individual case of what's going on in the review and what type of life insurance we're actually looking at. There's a completely different review for a term life policy than there would be for a universal or whole life policy.
Okay. That in itself is a confusing topic of what's the difference between term and whole.
Right.
And, sometimes it is imperative that someone has the security of life insurance. And if they can't qualify, are there other options for them?
So there are different policies that the life insurance portion is a little bit more expensive that you could do. And I would say you would be going more the whole life route. There are still disqualifiers in that. But then there's other things that you could do through financial planning where, you could look at different options for IRAs that can help you to do some planning that you're self-funding. If you're on a higher income level, or because you are splitting assets, that you put a certain portion aside from your asset split to take care of those type of things in the future.
Wow. There's a lot of things to think about, isn't there?
Right.
I know when I went through mine, there definitely was a lot of things that I had to consult with a lot of people. And sometimes I didn't get the right information, so I didn't make the right choices. But you never know until you've been through that.
That's true.
There are some life insurance policies I understand that have like the long-term rider with them.
Yes. So you can add a rider onto any life policy, term, whole. A whole life policy, just so everybody knows the difference, a whole life policy, you're actually growing equity and cash value, whereas a term life, you basically have life policy for a certain term, and it's a dollar amount, and after that term's up, the dollar amount goes way up, so you have to reapply for a new life policy to see if you qualify. I usually have most of my people do a little bit of both, depending on what their asset level is, what they're trying to protect. But you can actually add many different riders on a policy. So there's a disabled policy rider that you can add. You can do a long-term care policy rider. You can do a dependent rider. So all of those riders are things you should look at. If you're younger and going through life, I always recommend the child one because you're getting free insurance for your children. And then you never have to think about what if something happens to one of them.
Yeah.
And then on the long-term care, it's two separate things. You also can do a separate long-term care policy. I recommend looking at those starting at 35. Usually at 35, we're pretty healthy. There's not anything that we've faced that much in life. But once blood pressure issues and cholesterol issues come into play, that's when life insurance, you start seeing changing of your tabling and your rates increasing. So after you hit that 35 level, approaching 40, your term rates go up. You still get pretty qualified good whole rates and universal rates. So I would just recommend that you wholeheartedly look at it. Sometimes where you're at is the best thing, and changing your beneficiaries is the best thing.
So when we're talking about property and casualty insurance, sometimes, those get overlooked, and there might be some adjustments that we need to take. Can you speak to that?
Sure. So in property and casualty, you're looking at 3 different levels. Do you own a business? Is there something involved in that you all are splitting? Your auto insurance, I'm going to call it your toy insurance, your boats, your golf carts, your ATVs, and then your homes and rental properties, and then also an umbrella policy. So when you're looking at autos, traditionally that is the one thing that gets overlooked for some reason in divorce. Everybody knows I drive this car, but they're mostly jointly titled. And that always puts the ex-spouse out on some kind of risk. I would recommend after the divorce is final, having your own individual policy where you're the named insured on the policy so no one can make changes except for you, and you add them as an additional insured after the fact. So they're listed as an additional insured, so they're protected by the liability. But the checks come to you. You get to make decisions on the car that you drive and you own based on what the divorce settlement states. Homes are a little different. There's always refinancing that has to occur if there's financing. If it's a cash, it's completely paid off. That's a different situation. You can just switch title, do your quick claim deed, you move on, and you get your insurance just in your name. In homes that are either being repurchased or sold, you keep usually in both names until that settlement is done and your divorce decree settles as what percentage goes to which. So just make sure that that's stated in there so we know what we're supposed to do on our side. And that happens in claims too. Say that I'm going through a divorce. The divorce isn't final. That's going to be a 50-50 decision on each part until the divorce or the separation agreement is in place for insurance companies to know what to do. But mostly what we want to look at is how do we protect you as after the divorce is completed. And my recommendation is trying to get everything only in your name and having an additional insured on there. If you can transfer titles and do everything because they're clear and free, that's one thing. I don't think we live in the day and age where everything's clear and free when we go through divorces. So a lot of times we are trying to figure out how to get to that step as fast as possible. So I would say work with your insurance agent. If you need work with our team. We would love to work with you to try to figure out what's the best way to help you get through that and make sure you're protected through it all.
When we were separated, we had to have our roof replaced on our home, and the insurance carrier required my ex to be on the check. So the check went to both our names, and I had to have him, endorse it so I could because he had been gone for a while.
Right.
When property and vehicles are still in both names, it really does get complicated, and sometimes it can leave the person who is still occupying the house or driving the car in a bad position, but also it may be a disadvantage to the one who's not, because the claim can affect their coverage.
Correct.
Or their future ability to get coverage as well. And the other thing that sometimes we encounter is the person that we thought was making the payment let the policy lapse, and you had no idea. So what would you do in that situation?
So if you're the person that's in charge of the vehicle, we'll start with cars, I would recommend, and during separation it's a little different because everything is common ownership. Once the separation agreement is in place and you have a divorce agreement, then at that point you can actually split the policy off and just put that person as an additional insured. That way it doesn't affect them if you have a claim on your car. Property is tricky. As long as it's titled in both names, it has to be in both names. If you have a mortgagee, you're going to have 3 people on the check. So I would have some sort of agreement written into your legal agreement so that you all know how things are going to be handled.
Yeah. There's just so much to think about again. But, if somebody doesn't pay the premium, they just let the policy lapse and you didn't know about it, you're in trouble. There's no coverage.
As long as you're listed as an additional insured, you can get a copy of that. You should be able to be part of that.
Yeah. Would you get a notice that they had let it?
So I would be proactive with the insurance agent and let them know you are going through a divorce if anything happens with that policy that you want to know.
Yeah, that's very smart. Because the bank is always informed, aren't they?
Yes, they are.
Okay, so let's consider the umbrella insurance that where you would have an umbrella coverage. Expand on that. What does actually that mean?
So an umbrella coverage basically is going to be overcompensating anybody in your household. So that would be you, your current spouse. If you're going through divorce, that would just be you. And also any asset that you insure. So that would be all your vehicles, any kind of boat, ATV, golf cart, any properties that you own. It would overcompass all of that if it's all in your own individual name. When you go into LLCs, there's a whole different level that you need to insure on another level for umbrellas. But you can actually do an umbrella at $1 million. You can go up to whatever high level asset you need to be at. That's going to be just depending on the carrier and the underwriting on it.
Gotcha.
And that would just mean in the time of this day and age, I would say they're more important than ever. There's more dog bites for some reason. There's more trampoline accidents. There's more pool accidents. There's more distracted drivers in the world. I think everybody will say that someone in their household is not a great driver. So it just gives you an extra level of protection on top of the current liability that you have on your auto and your homes.
Yeah. And, we can't anticipate what we're going to need insurance for. And that's why we have insurance, because we don't know. It's the unknowns that we're covering. So long-term planning, long-term care is a concern as we age. And how does divorce affect plans in the long-term care insurance? I know we've talked a little bit about it, but can you tell us a little more about what that long-term care actually is?
Yes. So long-term care is if you are injured or somewhat disabled that you're not able to go back to work and you need care. That can be in-home care. That can be care outside of the home. One thing to consider is in a lot of people's employment, there's a long-term care for the spouse and for the individual, and you're paying through that at a lower rate. It's not an actual rate that you're paying, that you carry that policy with you when you leave. That's also a short-term care. So one thing you want to consider is what would a long-term policy actually cost you if you're just an individual and you're going through a divorce. On average, the rates are higher the older you get to qualify for them, because we have more considerations.
Yeah.
Again, I was talking about that 35 to 40 year age gap where most of us feel like we're very healthy and we're good to go and there's not many issues. And then we start seeing things as we get older. And a lot of it's just genetics that we go through, which is the same thing that they qualify us on long-term care and also with our life insurance policies.
Yeah. So what role does seeking legal and financial advice play during this process?
So I think professional advice on any level is invaluable. Attorneys specializing in divorce and financial planners help us make sure that we're making the right decisions and that we're considering all aspects of everything. I always think it's great when those people work with a network of other professionals too, because I think it helps us understand the level. Like, I'm very good at insurance. I know a little bit about divorce because I've been through one.
Right.
But it's really
but everybody's divorce is different.
Is different, right? And so we all have to look at things in a different way. And how do we get better? Anybody in a professional capacity that we go to and can give it and be consultative helps us get to the next level. And I think when you're going, unfortunately, divorce brings a ton of emotion. So you're not thinking about how do I take care of myself financially. You're basically feeling like, how do I get through this?
Yes.
So, I mean, anything that you consider and you can take away and take time and look at it to make the right decision on what you need for your future, it helps take some of the surprises of the future that you might be facing when you're going through the divorce itself.
Right. And that in itself is the reason that I wanted to start this podcast and why I invited you and other professionals to come and just have a little discussion, because you have the expertise.
Right.
And, if we can collaborate together, we can definitely help people to navigate through the hardest part. And that's getting through the emotional and making wise decisions, because you're not thinking about any of that. All you're doing is hurting,
right?
And you just think that this is the end of your world. Any time that you can have a team of people that are willing to collaborate together to help that individual, or even that couple. It's not always about one party over the other. Right. I mean, I prefer to help both parties and just make sure that they make wise choices for one another and themselves, especially their family if they have children. So as we wrap up, Stacy, what final advice would you give to someone navigating divorce after 50, especially regarding insurance?
I would say try to plan ahead as much as possible. I know things come as a surprise, and when you're working through a separation and you know that it's going to be a divorce, I think the biggest thing is to sit back and look and say, where do I want to be? I know where I'm going, where I've been, but where do I want to be? And who do I need to get into my life right now to talk through those things so I can make sure that I'm secure in it? I know that in my family, my parents experienced a divorce later on, and my mom wasn't working. So she had to literally figure out, how do I do all of this on my own? It's not just one aspect. So, and I know men go through that too. Men, it's a back and forth, right? someone will get a surprise and they have to work through it. So what can you bring into your life to make it better for the next steps? And I do think financial advisors are one of the best. I think I'm going to say they're the best kept secrets, because I think people think I need help, but they don't go because they're like, I'm embarrassed about where I was, or I didn't know enough. Yeah. And so I do think sitting down and trying to work through that is important. I think the other thing is, which I'm not really great at, is taking the time to put it first, right? Yeah. And then I think working with people like you that can help them on the side of, what does it look from this piece of real estate to the next? Working with insurance agents that are very experienced in the field and have been there for a long time. Even lawyers know things that we can never think about. Now, they might not ask us the questions, but I think getting a list of questions together before you go in and trying to work through what the next steps are.
Yes. And, one of the things, too, that people forget is, they're just needing to update beneficiaries, changing their coverage limits and all those things. There's just a ton of things that you won't think about, but with the professional that knows the ins and outs of the divorce process, I think, you're a very valuable piece of that team. I just want to thank you now, Stacy, for shedding light on this important topic to our listeners. Thank you for joining us. Remember, divorce after 50 can be challenging, but with proper guidance and planning, you can navigate this transition successfully. Stacy, you want to tell them how they can reach you?
Yeah, that's great. So I work for Assured Partners here in Lexington. We are in Hamburg. You can reach me if you want an insurance quote or just some advice on insurance at 859-983-8999. Or you can email me at stacy.starkey, STARKEY, @assuredpartners.com.
And my name is Shari Frazier. You can reach me at 859-229-5945. I'm a real estate agent of 22 years, and I specialize in helping people through hard things, especially divorce. And to our listeners, thank you for tuning in to another episode of Divorce After 50, Navigating the Silver Split. Be sure to subscribe for more expert insights and practical tips on navigating the intersection of divorce and financial matters. Until next time, take care.